For the first time in over 3 years, I've started buying Tesla stock back. Mind blowing. I know after that wicked earnings crash, yes, I'm taking some positions here. I'll share with you. We're going to talk about Google stock finally expanding into the price to earnings multiple of the 30s, where it deserves to be with the other magnificent 7 that is benefiting my portfolio greatly. But we need to talk about these growth vectors in the portfolio, what I think, how I feel. As many of you know, I sidelined my entire portfolio at the beginning of 2022, just before the major crash into broad-based index funds, just to protect myself and give me a place to cost average to ride up the volatility. But I'm back, baby, in full force, taking a look at building out my tax-free savings account first and foremost after that major real estate purchase. I've got about 25,000 Canadian dollars in here, all shifted to the US side of the markets. And we can see that I picked up Tesla today. I got 11 shares at $181.49 as a minor starter position. This was where most of my focus will probably be for the next 3 to 6 months as I build a position out over what I think is going to be a rather lackluster year from an analyst standpoint, but from a long-term vision, we'll get into that in a moment. We got Google here that's been crushing it up 7% right now, and the broader indices have just been doing fabulous for me here too. I mean, we also got some stocks in my corporate account on the US side of the border, like VOO, it's up 16%, Google 6.7%. These returns are absolutely astonishing considering how long my portfolio was basically in the red and flat for over the last 1.5 to 2 years. But now that we're getting back into a place of what I think is a little more normality, I don't think we're fully there yet as we're still riding through the interest rate cycle and the inflationary market, that you got to be prepared that growth stocks can really get hindered if they can't meet certain expectations, because the market is dumb right now. They don't care about future prospects and businesses, and it's leading to discounts because the only thing anyone cares about is earnings. And that is what we're now seeing is, Google and Amazon and all these big companies have done mass layoffs to start adding margin to their bottom line because they recognize that the market's only caring about one thing: revenue growth and earnings growth. And you can see Google's chart is exactly following the earnings growth. And I believe now that, a lot of the earnings in the upcoming quarter have been priced into a lot of these stocks because we're expecting a big jump in earnings here. And that, again, will bring Google to probably a more favorable value for itself, which is why it's now trading at this closer to 30 times multiple, right? Like many of the Magnificent 7 are. But that makes me not want to buy it as aggressively. I want to wait for dips. I want to see more volatility and concern. And that's what we're seeing within Tesla stock now, which is something I've been desperately waiting for a very long time on. And I'm very thankful for this. But as many of you know, I'm trying to take these on as long-term positions from here. I'm looking at least 3 to 5 years out, at max, maybe 10 years, but I'm going to use these as growth vectors to fast track my way to financial independence. Eventually, we'll be liquidating these to probably buy more broader-based ETFs like SCHD or dividend-focused ETFs to start generating cash flow to replace my income. But because I'm not cash flow, pivoted and dividend-focused today, I need growth vectors that will outperform to get me there quicker. And I believe Tesla's going to be a nice proponent to this story. Now, Tesla's been getting absolutely wrecked, which is making me excited because I told you guys I would not buy it anywhere, in this $200 range. And I've been waiting a long time. I missed the initial drop here because, as many of you know, I was sidelining my portfolio. I sold at a Tesla stock somewhere back here, way back in the day. And I was like, we'll see how this story unfolds. But without self-driving, actually generating revenue or all this stuff, I don't want anything to do with the company because I knew a day like this would come. But now I'm recognizing people are not pricing in the severity of what's coming around the corner in the next 3 to 5 years. We'll talk about the car side of the business. But I mean, robotics is what's going to be the big story that's being underappreciated right now. Here's a company I talked about on my live stream called Figure AI. This company just signed a manufacturing agreement with BMW as a direct competitor to Tesla's bot. I mean, we all know Boston Dynamic has some pretty extreme robots, but at the end of the day, a lot of this formula is going to come down to the brain of the bot and how the software is going to be running these systems. Now, I have been primarily telling you most of my money is going to software-based businesses. I'm still looking at Microsoft aggressively, but I believe Tesla's software is going to prove insanely dominant here, and we're seeing it in their version 12 of self-driving. And I think people have given up on the story as I had a while ago, but now I'm recognizing that the market is starting to disconnect the future of where this company is going versus just the auto business of it today, right? Because again, you look at the future problem, and every country is facing this right now, from the likes of North Korea all the way to Russia, and here in the Western world, that population growth is leading into a big, going to be what is going to be a supply and demand slump. They're claiming that maybe there'll be about an $8.5 trillion talent shortage. It's going to be a huge I mean, how many of you are having kids? It's just a simple question, right? Like most people are having 1 to 2 kids today, and they're not replacing enough of the older generation to the point where it's going to cause a lot of issues in the economic cycle in the next, 30 to 50 years. So it's just something to pay attention to that I think these robots are going to start solving for. Now, let's talk about the EV side of it, because let's be real, people are hating on EVs. They've given up on the whole idea of just plugging your car in at night, not having to go to a gas station or get oil changes ever again. And everyone I know that owns a Tesla that's had it for a few years have not complained and absolutely love it. It'll never go back. Yet everyone's hating on EVs to the point now where I think people are really not distinguishing the difference between what's actually coming and what's happening today. Because I think you're on one of two camps. You either think EVs are the future or you don't. And if you think EVs are the future, there are only really two companies in the EV game right now, BYD and Tesla. Everybody else is proving that they cannot profitably make EVs. They cannot sell them at scale. Their supply is building up far beyond the demand they've been able to sell them, whereas Tesla has the margin to cut prices. And that's the advantage they've had in this tougher market cycle. But because they can't actualize earnings or revenue on those, record sales, it looks terrible on their earnings. And that opens up the window of opportunity for me, because I think in the next 3 to 5 years, the rude awakening is going to hit a lot of people. And we're seeing that with companies like GM. When 2025 rolls around, Tesla's going to have a brand new, what's supposed to be one of the cheapest EVs on the market. That is their next wave of growth, as Elon called it on the earnings call, just from the car side of it. Yet when we look at the 2025 lineup of many of these major legacy autos, they ain't talking about EVs, are they? No. They're talking about their internal combustion engines. And honestly, if Tesla can meet the price points of these cars, say goodbye. I think that will be the next growth phase, especially when we get into the interest rate cut cycle. So I think from the auto business, I really like where Tesla sits. I don't have to break the story down. You've heard it 10 bajillion times. But from every aspect of what Tesla's doing, I'm finally kind of gearing back up saying, hey, I don't need to wait any longer to make sure self-driving is generating revenue or these robotics become a realized product, because at this point, it's an inevitability. They have the balance sheet to support it. Most of their industry sectors don't. They're not a small cap company, but they have like insane talent and growth and money backing it to where I think there's real potential. So I'm just going to be sitting on my hands here over the next 6 months, cost averaging the Tesla, hopefully between this $100 and $200 price range. I really like it currently at this value. As I watch other earnings to see what other tech companies may come up for sale, as I said, I want software, I want hardware, I want the best of the best in the AI and the tech industry, because that's where the last decade of growth has been. That's where the next decade is going to be, and that's what's going to fast track my retirement. And again, I am just trying to pair my portfolio as best as I can with my fiance, who already owns Meta in these stocks. And I promise you, I will be doing kind of a portfolio round update at some point in the near term here as we start balancing everything out. But I'm going to be watching for Microsoft. I'm going to be watching for Apple. Every time Apple dips, I'm like, I should have just bought it, and then it rallied back yet again. But I'm looking at these awesome companies and continuing to figure out where the best value is, and we'll see how it pans out. I mean, if it doesn't pan out, guess what? You can watch it live, because I've been 100% transparent since I opened this channel in 2019. So consider subscribing for that. But I'd love to know what you're buying and what you think in that comment section below.